OpenAI has just made another partnership with Broadcom. Guys, we got a lot of stuff to talk about, but I want to let you know that I will be on the road this week from Tuesday to Friday, hopefully trying to update you as best as possible. And if so, it may be through YouTube Shorts, but I will definitely be in the Discord. So if you are not trying to miss out on anything, make sure to join the server. It's the top link in the description down below. AVGO, otherwise known as Broadcom, has just secured a deal with OpenAI and is up currently 10%. OpenAI partnered with Broadcom to produce its first in-house artificial intelligence processors. This is actually really big news for the company. Also, Brookfield Asset Management to invest $5 billion in Bloom Energy. Bloom Energy is up over 25%. And this stock is also only a $25 billion market cap. So this is another one to put on your radar as well. We know that Oracle recently got a partnership as well. Oracle, OpenAI signed $300 billion cloud deal. Now, with all of this in mind, here are all of the deals that were signed with OpenAI. Now, lottery stocks, why is this a big deal? Why are we even bringing this up? My personal opinion for this video, or in general, is that OpenAI is, and it is, if I could invest straight into OpenAI, which I don't know, I don't believe there's a possible way to privately invest in this currently, at least for somebody like myself, I would do it. I would probably full port into OpenAI. Now, OpenAI, the companies that they are partnered with, I would love to have a piece of to hold for the long term. I would very much so love that. And that is, first of all, Stargate, the US government, $500 billion, Nvidia, $100 billion, AMD, $100 billion, up to Intel, $25 billion, Taiwan Semiconductor, $20 billion, Microsoft, $13 billion, Oracle, $10 billion, Broadcom, multi-billion dollars. OpenAI's valuation could exceed $1 trillion as soon as next year. This will be and is, in my opinion and other people's opinion, the fastest growing nonprofit. And that will soon not be an opinion once that comes to fruition. So what am I saying? Long story short is that all of these companies mentioned are ones to be taken seriously alongside anything in the AI space that has to do with chips, data centers, energy, and that's where APLD comes in, up 12% on the day today, again after hitting a new all-time high. I love this play. It's up almost 300% in the long-term portfolio. While I am gone, I'm going to drop a video of every single stock I hold in my long-term portfolio, so you are going to see some that were dropped off as well as added. Speaking of energy plays, EOS, this is not sponsored. There's no sponsorship in today's video. This is up 500% in the past year. And this is flying today, up 23%, coming up towards all-time highs. This is one to put on your radar as well. Now, JPMorgan also just announced a $1.5 trillion US investment initiative. JPMorgan announced Monday that it's planning a $1.5 trillion investment initiative aimed at bolstering sectors critical to the U.S. economy over the next decade, including up to $10 billion in direct equity and venture investments. This is huge because it shows that these bigger players, these bigger institutions, are trying to, truly they're trying to make money, obviously. Truly they're trying to hold power. They're trying to keep their hands in powerful areas, and that area is AI. That is AI infrastructure. That is the future, and all of these big players will be investing their money into it. So when you see all of these stocks at all-time highs, it might be scary, but I believe it is still enticing. Now I want to talk about something. Recovery after $500 billion crash sets stage for Q4 rebound. Everything is rallying today as if nothing happened, but we are going to talk about some rejection candles that we are seeing. First of all, I want to state that the government is still in a shutdown. Not only is the government in a shutdown, but prediction markets are now betting that this could be the longest US government shutdown ever. So longer than 35 days or so. I believe that was the longest one. Correct me if I'm wrong in the comments down below. This means right now, when the government is shut down, that there is less regulation. Now, what happened with all of these liquidations? Where did the money go? Is money going to come flowing back in? Are we in a bull market? Are we in a bear market? The SEC and CFTC are mostly shut down. Normal oversight, filings, audits, investigations, they're all paused. Only essential operations like major fraud, emergency market events are still staffed. Crypto and derivatives markets are effectively in a low supervision mode, meaning more room for leverage manipulation as well as sketchy activity, which is what I believe we've seen during those liquidations that we saw the other day on Friday. Now, once the shutdown ends, agencies can still retroactively investigate or enforce. So let's talk about those huge liquidations that happened. Where did all that money go? That money specifically flowed from liquidation longs or leveraged retail traders to short sellers, market makers, as well as exchange insurance funds. Leverage traders got roasted, especially retail. More than likely, big money saw what was coming and used the headline to offload pressure. We saw recently, prior to the crypto liquidation, alongside the market liquidation, actually, what we seen was that leverage trading was at all-time highs. Leverage trading by retail investors, all-time highs. So retail investors basically got rugged. Everybody trading on leverage got rugged. And we basically saw a very weak floor finally get broken. A floor of borrowed liquidity. We saw all of the liquidity is not being parked at the Fed. It's being parked in other areas. And any liquidity retail held onto was likely not being parked in gold, silver, or bonds, but was parked in leverage trades, because that is what retail does. They don't buy gold and silver and bonds. They go and they leverage trade trying to make a killing, and they all got wiped out. Now, gold is still trading above 4,000. There's some shit going on still. It's not over. Nothing's over. Silver's at all-time highs as well. In fact, Bank of America also sees gold passing 5,000 an ounce coming into next year, assuming that it's going to continue to rise. Now, Goldman Sachs CEO says there will be a stock market drawdown and people won't feel good. We also saw Jim Kramer last night post, "We're totally back, whatever," in the market, which, if you don't know the inside joke on that, it's that you go inverse whatever that guy says, aka market crash or drawdown. Now, the SPY is up 1.42%, but this is just because of a gap up on headlines that Trump and the president of China, President Xi, are okay, which I don't believe is the case. What's happening in the market is that they used a headline to break that weak liquidity that was in the market and profit off of it, under especially specifically less regulation due to the government being shut down. All of this will come to pass where most of retail traders will lose their money if you're not part of a strong community. Now, the SPY is at 662.40. We can see on the 2-hour time frame it is pressing up against this level, this ascending resistance level, which was support for quite some time. And here's what it looks like on the daily time frame, this daily candle pressing up on this resistance level. What we see right now, given it's only about 2 hours into the trading day, is low volume. We see low volume currently on the SPY. It's not crazy. It's not crazy low, but watch for the daily candle close and see what the volume looks like. If this volume surpasses the volume on Thursday, the 9th, of about 70 million, if we surpass 70 million, the SPY will be in an all right scenario, possibly building its momentum to break higher. If we get a break higher, in order to notice that it is not a breakout, I would watch for confirmation for the SPY to get back above 667 and open a daily candle above 667 to believe that, or at least to have a little bit of confirmation on these markets. But right now, things still look choppy. Things still look weak. Realistically, nothing changed. Leverage traders just got wiped out. And the same thing goes for Bitcoin. We rejected off of a key level at 116K currently. All of that money is now given to these bigger players. Where are they going to park that money? What are they going to do with that money now? Are they going to wait for a harder sell-off in the market before injecting that money back in letting retail be exit liquidity. Is retail selling? Are they going to get retail to sell? What is your thoughts in the comments down below on all of this? Are they going to dump money into all of these chip stocks, energy stocks, data centers, right? What are they going to do with all of this capital? Now, Michael Saylor's strategy bought another 220 Bitcoin worth 27.2 million. And MicroStrategy is trading at $310.60, up 1.91%. We watched this zone for a bounce bias and we bounced off of it twice. However, we have been trading under the 50 as well as the 200 moving average for quite some time. And ultimately, this is kind of scary. This is a little bit scary, especially where Bitcoin is trading at right now. But I do want to state that I still believe and I still hold to it at some point, and this is where retail investors can take kind of a breather. Most of you guys that are watching this, I'm going to give you kind of a breath in all this chaos. And the breath is that whether we sell off here hard or whether we pump to highs, all you have to know is that the 131K level, in my opinion, will stay on the table. This has not gone off the table. This has been my high for a while. I've talked about it. I still think we get there. Very similarly for altcoins, it's going to move when Bitcoin runs for that high. What will trigger this high to come on Bitcoin? Well, maybe it's the government reopening. Maybe it's the data releases that we have late October with or without the government opening. I believe we still get some data late October, which could cause that final spike to 131. But if we go into a bloodbath, if we go into a crash on the market, if we go into a crash on crypto, we still, in my opinion, see the all-time highs end of year 2025, end of year 2025. This means remain calm, stay cool, calm, collected. I'm buying the dips. I also find it coincidental and kind of funny that banks are closed today and Friday was the largest liquidation event, meaning that retail isn't able to ACH transfer to their brokers or to their wherever they trade crypto on and buy these dips. We saw obscene liquidation wicks that a lot of retail investors weren't even allowed to get in on, right? Unless you had some free capital in your account. So I also find that pretty funny as well. Right now, I'm just going to watch the SPY closely. I'm going to take some nibbles at some big companies that are getting deals with OpenAI because I can't directly invest in OpenAI. And I will be watching, enjoying the show. As far as short squeeze plays go, if that's what you're here for, I am going to be covering that tonight. I wanted to cover everything that is really going on behind the scenes right now and kind of give you a little bit of a warning for it. In Discord, I think our best bet is to get into some snipe trades every day or every other day, 1 to 2 profitable ones. Most be patient, stepping off, running stop losses, and just kind of watching headlines pretty closely. I think that's the simplest way to do it. Don't over leverage, run your stops, and pick the right plays. And if you're not in the Discord, make sure to join us. Top link in the description of the video. Later on tonight, I'm going to cover AMC, GameStop, and then some plays that correlate, as well as giving you another short squeeze play. Make sure to tune into that one, guys. I love you all. God bless. Make sure to join my Discord and get the top link in the description for my custom indicator. Love you all. Peace. Lottery stocks out.